trading with a second line of defense. That sounds a bit cryptic. So let me ease into this topic step by step. And I'm going to start with a couple of what are called claims. And claim number one, and you may disagree, but these are some claims that I'm just putting out there. Claim number one is it is easier to trade with the trend than to trade against the trend. In our view, your odds will improve of having a successful trade if you're trading along with the predominant trend. The trend is your friend for a reason, and I mentioned it many times before. In our view, the odds of the trend to continue are simply greater than the odds of a trend to reverse. Trend reversals don't happen too often. Trend continuation is more likely. We're trying to take advantage of this fact. So this is claim number one. And here's an example of this. I showed this slide before. In most of the setups that we are looking for, we want to trade with the trend. In fact, we are requiring as a precondition that the stock has been in a trend for quite a long time. Claim number one. Claim number two, and it's more of a statement, support and resistance can come in many different forms and shapes. And I want to give you an example of what I mean by this, because there's two things to this whole thing, to the statement. So support and resistance come in many forms and shapes. Let's check out this example. Let's assume for a second or for a minute that we have a support level down here and we have a resistance level down here. And price is somewhere in the middle right now. Let's see what happens. Let's just go through the price evolution from here. So initially, price comes down. It's approaching support. You can see it here. It came down towards this level. And as you may expect, while hitting support from the top, this support level will potentially prevent price from going further down. And instead, we will see a bounce off the support level towards higher price levels. Done. So back in the middle here. Now price continues higher up and it comes close to this resistance level. It's approaching resistance from the bottom. Keep this in mind, directionality is very important. Yeah, from the bottom, from below, we're getting to resistance. And once again, resistance is called resistance for a reason. Price may bounce off this level towards lower price levels. So you can see it here. We came up and bounced off again. Now we're coming closer to support. We're approaching support once again from the top. Directionality important. Yeah. And once again, we are seeing a bounce off the support level towards higher price levels. And this seems or must be familiar to most of you. But now something interesting happens. Price jumped up. It broke resistance. So we came up to resistance. We didn't see a bounce now. We broke above resistance. And what happens if resistance is broken? It will change world. It's very important to realize this. It will change worlds and resistance will become support. And now what can happen here? We are now above this level here, which is now acting as support. And when we come further down again, or should price come further down again, down to this level, which used to be resistance, now acting as support, we may see a bounce off this level towards higher price levels, because this is now a new support level. Resistance has become support. We're bouncing off this level towards higher price levels. Price then retraces once again back to this blue line. Same story. We're coming from the top down to this level. And once again, we could anticipate a bounce off this level towards higher price levels, exactly as shown here. So what is the takeaway here? So first of all, it doesn't really matter how you call a level, whether it's originally called resistance or support. That's not what's important. What's important is from which direction price approaches the level. When we come from the top towards the level, this level may act as support. Like in this case here, we're coming from the top down, it's acting as support. Up here, we're coming from the top down to a level, it's acting as support. If we are coming from the bottom, it will act as resistance. Like here, we're coming from below towards this level, it is acting as resistance. And here again, directionality is so important. It really matters from where price is coming. That's your first takeaway. How you call these levels, not so important. From where price is approaching a level, That's important. All right, that's takeaway number one. Takeaway number two, and remember the claim was support and resistance can come in many shapes and forms. These static levels, as perhaps identified by our liquidity IQ indicator, are not the only form of support and resistance. Another form of support and resistance can come in when we consider the volume profile. Like in this example here, look at the indicator here on the right-hand side. That's a volume profile. Okay? And now in this volume profile, let's find together the node with the highest volume, the node that sticks out the longest to the left-hand side. You can see these little nodes here. Now they're coming from the right to the left. Where is the longest one? I have a couple of longer ones. There's one big one here. There's another fairly long one here. There's, I guess, one here as well. But the longest one, it's this one here. See this one here? This is the longest node, the one that sticks out to the left the longest. This is what we call the zone of control of our volume profile indicator. And if price approaches this zone of control from the top, it may act as support as well. We can see it be coming from the top, from up here, down to this level. This level now, this zone now here, may also act as support, in addition to the levels that we know from our liquidity IQ indicator. So support and resistance can also be found by considering the volume profile. So this was a bullish case here where we may see support. Here's a bearish case. Look at this. Where's the biggest node? Once again, now, if you look carefully, there's a couple of bigger ones here, but the biggest one is this one here. See this? This is our zone of control. And price is approaching this zone from where? From below. And as a result, this level here may act as resistance because it could be coming from below to this level here. All right. So I hope this makes sense. So support and resistance can come in many different shapes and forms. And what really matters is from where price is approaching a level, either from the bottom or the top. And the last claim for today, and I'm going to put it all together into one big conclusion. So stay tuned for this. The last claim is it can help if we find a setup with what we call a second line of defense. This is not a soccer analogy, even though you can think of it in soccer, that having a sweeper behind your defensive line, the sweeper is the position in soccer which is there for the emergency. Yeah, when there's a breakthrough, the sweeper might be able to stop that player from scoring. That's your second line of defense, your sweeper in soccer. But it can also exist in a similar manner in trading. A second level of support, for example, if we are looking for a long setup, or a second level of resistance if you're looking for a short. Here's an example. Consider this chart. What do we see here? Okay, we are, I guess, in an uptrend, even though there's no label here, but we're making higher lows and higher highs. We are in an uptrend. Prices retraced quite a bit down to this red line here. That's the support level. We're coming from the top down to red line. That's support. We just discussed this. But what do we see right below this red line? What do we see here when we consider our volume profile? The zone of control, the biggest node, is right below. So in this case, we are technically having two support levels, which can stop price from coming further down and instead may have price bounce to higher price levels. It's this red line here and the zone of control just a bit below. This is what I mean by having a second line of defense. Two levels which can stop price from moving further down. In my view, this is just another checkbox in your setup which can further increase the odds of actually seeing a bounce, because now you have two levels in place which can become important from stopping price going further down, and instead price may bounce to higher price levels. Here's another example. This is a bullish case. Here now, a bearish case. So price is coming down. We are clearly in an uptrend, lower highs, lower lows. We are coming up to a resistance level, or actually a former support level, but now acting as resistance. You can see this little red line here. It's a bit hard to see, but it's there. Yeah. And right above, what do we have? the biggest node, the zone of control of our volume profile indicator. And once again, this gives us a setup with a second line of defense, a second form of protection, which hopefully will prevent, in this case, from prices to come further up, and instead price will bounce at this level towards lower price levels. This is what I mean with trading with a second line of defense. Now, this may sound great and say, yeah, of course, this is what I want to trade all the time. But there's a small catch. But there's also a solution for this catch. The catch is these setups are rare. There are only very few of them. They don't happen all the time where everything lines up, where we actually have a setup with a second line of defense. The good news is we are able to scan for these setups systematically. And if we are scanning through a large number of symbols, for example, our liquidity view dashboard scans through 6,000 something symbols, chances are we will be able to find a few of them. How this can work, I'm going to show you right now. Just keep in mind that this is a preview. This feature is not available yet in the live version, the one that you have, but it will become available. We're working on this. We're just tweaking it right now, but it's looking really, really good. I'm very excited. So let me show you how this works. So I'm going to go over to our dashboard here, and I will go to this tab right here, which is our staging site. So this is a version that you don't have access to yet. And the first thing I want to show you is that in the staging site, we now have the volume profile here on the right-hand side. It's going to be an indicator that you can choose from. If you go here and type in volume, you can see down here, volume IQ. It's available. This one here. It's great. So you have it right here. You can see all the things that you already know from our volume IQ indicator. Yeah, you can see where's the zone of control. Where are lower volume nodes? What is the directional bias at the current price levels? And so forth. All this is available in this volume profile. But best of all, instead of just having it on the chart, you can now also scan for certain setups. I'm going to show you a very simple scan. I'm going to show you a more advanced scan afterwards. So for example, what you could scan for is whether a symbol is currently in the zone of control, where the price is right within this area where the highest volume node is. So this is possible using this column here. It's called zone of control. And you can simply scan for in control zone. And once done, every single symbol here, let me just go to the S&P 500 just to keep it a bit simpler. 1 second. There we go. Yeah. Every symbol where price right now is in the zone of control has this little check mark here. For example, let me just find my Meta, Facebook. Yeah, look at this. Currently trading where? Right smack down in the zone of control, the highest volume node, which could potentially act as resistance. Now we're coming from the below into the zone of control, and look what's right above. Another resistance level as per our liquidity IQ indicator. This also is a setup of 2 lines of defense in place. Another example here, Palantir, PLTR, currently trading right in the zone of control. And what may happen? Potentially, of course, no guarantees, but potentially this zone of control, as it is approached from the downside, may act as resistance, driving prices further down again. But what I really want to show you today is how you can systematically scan for setups where we have 2 lines of defense in place. How is that possible? And that's a preview. So let's say, okay, now we're putting everything together. So claim number 1 was it's always easier to trade with the trend. And let's only consider long trade for the first scanning. So Mirage is going to be bullish for at least 500 trading days. You already know the scan. It's the one that we do. We've been doing many times before. Secondly, we want to enter long, and we want to see prices bounce off a support level. So I'm going to go to Liquidity IQ setup and select long bounce. So far, so good. Oh, we still need S&P 500s here. I'm going to go to all symbols. Okay. There we go. Okay, so Mirage, bullish for more than 500 trading days, and long bounce setup as per our Liquidity IQ setup. 40 symbols left. And now what we can do, we can use one of these scans here, it has a cryptic name. Probably going to change it. Again, this is still in development. But we can now scan, hey, which of these symbols currently has also the zone of control right below price, acting as a second line of defense. And one scan we could use here is, for example, this one here. I'm going to show you in a second how that works. Zone of control is less than 10% below price. And if you go here to SPGP.L, the iShares Gold Producers ETF, what do we see here? Price is near support level. We had even a bunch of liquidity captures here. And the zone of control, this high volume node, is right here, acting as a second line of defense. That's a beautiful setup. Would have been even more beautiful if we were a bit closer to this level. Now prices have bounced up a little bit up already, but nonetheless, that's beautiful. Well, this one here, LTL. Now, this one is not perfect because here we're coming from below to the zone of control. So this is not ideal, but you get the case. Okay. Let's turn this around. Let's look for shorts. So I'm going to clear my filters one more time. I'm going to go to Mirage. Has been bearish for at least 500 trading days. We are near a key resistance level as per our liquidity IQ indicator, and the zone of control is above price. For example, here at most 10% above price. And we have one symbol here, ZH. Look at this. Beautiful. We're coming up to this resistance level. We have a liquidity capture even here, and the zone of control is right here. This is also set up with a second line of defense in place. And now we can scan systematically for these setups when it comes to swing trading using our liquidity view dashboard, which will have volume IQ integrated. And this will be released in the next few weeks once we have finished testing everything and arranged everything and come up with the right scans that we want to run.